We have a lot of people that ask us questions about our analysis, and we've put out some basic cycle analysis videos, and we have a cycle analysis workshop that you can get some information on if you go to our website. Fantastic 20 video modules plus another 20 something videos. It will keep you busy for like 30 or 40 hours at least, and then you're going to want to watch it a number of times. So I'm going to give you a little primer right now as I look at the US dollar, Canadian dollar now, and we'll just take a peek at a chart that I think you're going to find really interesting. So whoops, didn't mean to do that, sorry. Crazy. Let's take a look as we look at the chart right there. There you go. So there is the US dollar, Canadian dollar. And as you can see there, you're looking at a candlestick chart and you're looking at a momentum indicator in there. So when we start out our cycle analysis work, what we look at is for what looks like a rhythmic money flow. Now, that is what really at the core of what cycle analysis is. It's a repeating period of time. Just like when you look at oscilloscope or a heartbeat monitor, there's regularity in the period between the cycles. Cycles are measured from low to low. So those of us that are trained in cycle analysis immediately look for the rhythms in lows, and that's where we always start when we begin our cycle analysis. So this is the US Canadian dollar, and you can see in here I'm looking at a 10-week, but we're only going to look here at about 4 years of the 10 weeks instead of 10 years to do this analysis. Generally, we like to go back minimum of 3 cycles, and it's really great when it works out for longer, for a period. So what I want to do is I just want to look at where some key lows are that might identify the rhythm in this mark, in this particular symbol. So I can see that there's a pretty important low that occurs like right over there. So I'm going to put a little arrow there, and it looks pretty clear that there's another one right over there. So I'll just put these arrows in, and it looks pretty clear that there's another one right over here. And so what I'm noticing right now is there's sort of a common distance between these lows. Remember, cycles are measured from low to low. So I put another one right here, and wow, this is kind of looking like an interesting rhythm in there, as you can see. Well, there's clearly a low right at this point right there. And then if I kind of look for another common area, common distance, it really looks like it's right over there. Then there's another important low seemingly right over here, and now you can see there is kind of a rhythm setting up. So if there was an ideal rhythm, in other words, let's just put this back right like this. What I want to do is I just want to discuss if it was an ideal situation. Let's say if you had even a directional component that was kind of even. In other words, there was no significant up and downside movement. They probably went up and down for the same time period. Then you'd get the low right over there. It would come up half the time, and then it would come down another half the time. And that would be the way the kind of the oscilloscope would look. It would be kind of like that. It would go up for half the time, and it would come down for half the time. And you can see I'm identifying these cycles right in there. Just go up half the time and down half the time. And all of a sudden the rhythm is kind of showing. You can see that. The rhythm up and the rhythm down. The only thing is that when you look up at the charts, well, the peaks don't exactly come at the time that we're talking about. What happens is that the peaks end up to be you can see this peak right over here was about halfway, but this peak right over here was about 3/4 of the way into the cycle. This was about 3/4 of the way. There was a peak here about 1/3 of the way, and then these other peaks were lower. So things change, and that's because of the money flow, the energy that comes in. So if I were to grab this right over here, I'm just going to activate this, what we'll call the zero upward energy. And if I were to then turn it up right over there, then things would begin to change. And I would then kind of set this up like this, where the upside of these cycles were like right over there and the downside was right over here. And now you see what's happened is that it established an uptrend. And uptrends give you later peaks in the cycles, as you can see right in there. So this is kind of what we go through mentally. We don't put these lines on the charts like you see right over here, but I'm identifying the rhythmic motion and seeing how the energies are affecting it. The momentum indicator right in here actually helps us identify the cycle rhythms, as you can see very clearly. And then also you look at things like support, resistance, and potentially breakdowns and breakouts. You can see right there clearly this downtrend that you had in there that was right like this had a breakout and then moved very sharply to the upside. So I just wanted to give you that little piece of all of everything that we do. Once we look at it and begin to set where we think these rhythms are, we then begin to build the chart. And eventually with the chart, what happens is that it goes from kind of our mentally looking at something like this to then looking like something like this, which has basically the same information in it. However, now it has way more information, and those of us that have a trained eye understand what this means. So here you can see those cycles are now shown with these cycle brackets on the bottom, which are the ideal rhythms that I was talking about. And then you can see what happened was you had an uptrend right in here. The uptrend stopped by having a head and shoulders top. It then came down exactly and hit the head and shoulders measurement. There are important support and resistance levels that are put in. When you get something like this cycle right over here, then only a small rally that you see right there, and then a breakdown. So in other words, the cycle low was right over here, is a couple weeks early. Principle of variance says that that's well within the normal time frame. It rallies 2 weeks. It's called an extreme left-hand translation because once it broke this support level from that cycle, it said that it's likely to decline all the way through the end of the cycle. Look what happened. These yellow areas that are highlighted are the points where there is a nesting, where both the minor and the larger cycle come down together, and that brings declines, as you see here and here and here. And guess what's coming right over here? So what these cycles that we're looking at are syncing up to is a low timing that works with our daily analysis that comes into the mid-June period right over here. So this nesting area is the end of May, and the daily pattern that we look at takes it out to the middle of June, and that's why we say we're looking for a low mid-June or between late May and mid-June. So we've applied all these cycle patterns. We see the money flow. We've looked at momentum. And then we put in the support and resistance zones. We use what's called swing high, swing low analysis. I've done a couple videos on that in our library. And what happens is that we create the resistance zones or the support zones. In this case, the resistance was right over here based on the fact that it had broken down. And you can see what happened, and it gave you great information as it turned down again. For our analysis on momentum, we use what's called a reversal scout on weekly and also on some very short-term things that Matt shows you with the stock index report live. And then on the dailies, we use the slim ribbon PO for the momentum analysis. You can see in here, momentum remains down. 5 weeks of failure right over here in that resistance area. What's weighing on this market is the fact that oil is now turning up again, and the Canadian economy benefits from stronger oil. We think it is going to continue to be firm for a while, and that is going to lend support to the Canadian dollar. So hence the US dollar turns weak. Remember, as this moves down, it's a reflection of the US dollar versus the Canadian, and we expect that to happen out into May, June. Also, if with the U.S. Taxes going up, it really creates a much weaker economic situation, and that's going to make the dollar struggle in here. And if it can pass, or some variation of a big tax increase for corporations for capital gains, that's going to continue to weigh on the dollar. So it's kind of a double whammy: strong energy and weak dollar from the tax situation. And we think that there is a pretty good chance that this is going to fall pretty significantly when we look at that. It could come way down to this last support way over here, which would be around 121. So there is a lot of risk when we look at that. You can see these magnificent cycle rhythms that I showed you as we were building from this mentality right here to getting to this great information that you see right there. That's cycle analysis, and that is a great look at what is a bad situation for the US dollar versus the Canadian dollar, which should be declining for pretty much the next 5 to 7 weeks in here, with rallies continuing to fail. I hope you found that incredibly informative as we showed you our very basic primer on cycle analysis. And please do go to our website, look for the tab on the top and the navigation for Cycle Analysis Workshop. There are actually 2 workshops in there, and you'll get an idea of what's in there. There's a table of contents and a video, and just go in there and watch it and take a look at it, just for further information for you. That is a look at cycle analysis for the US dollar and Canadian.